Andy, you had announced earlier this year that you're going to be spending $200 billion. There were a lot of folks in the investment community that said, oh my goodness, that's a lot of money.
Amazon just committed $200 billion in capital expenditure for 2026. That's more than the GDP of 130 countries. And last week, drones struck an Amazon data center in Dubai. The company that delivers your toothpaste in 2 hours is now a military-grade infrastructure target. And somehow the stock is down 6% this year. Let me explain why that's a gift. People still think Amazon is an e-commerce company. It's not. Not anymore. Amazon Web Services, AWS, did over $107 billion in revenue in 2025. It's the largest cloud platform on Earth. It powers Netflix, Airbnb, NASA, and the CIA. And it just locked in a multi-year strategic deal with OpenAI worth up to $50 billion. Let that sink in. OpenAI, the company behind ChatGPT, chose Amazon's cloud to scale its infrastructure. That's not a customer win. That's a validation of AWS as the backbone of the AI revolution. On top of that, Amazon runs the world's largest logistics network, 200 million Prime members globally. They own Whole Foods. They own One Medical. They're streaming the NFL, the NBA, and building an ad business that's already bigger than YouTube's. This company isn't competing in one industry. It's the infrastructure layer underneath a dozen industries. Let's talk about the $200 billion. Amazon just announced 2026 CapEx guidance of $200 billion. Most of that is going directly into AI infrastructure, data centers, custom chips, and cloud capacity to meet the demand that's flooding in from enterprise AI customers. They're building their own silicon, Trainium and Graviton chips, to compete with NVIDIA and reduce dependency on external supply. They're investing $21 billion in Spain alone to expand European data center capacity. ARK Invest just bought 67,000 Amazon shares in a single day off that news. And here's the part nobody is connecting. Amazon doesn't just sell cloud. They sell the complete AI stack: compute, storage, model training, model deployment, and the application layer through things like Alexa, Rufus, and their agentic shopping AI. They're vertically integrated in a way that even Google and Microsoft aren't. AWS is now running at a $70+ billion annual rate in cloud alone, growing over 30% year over year, and the AI demand cycle is just getting started. The stock is trading around 213, down 6% year to date, down nearly 18% from its 52-week high of 258. Why? Two reasons. First, the CapEx shock. When Amazon announced $200 billion in spending, the market flinched. Investors worry about free cash flow compression. The same thing happened when they ramped spending in 2022. The stock dropped 49% that year. Then it tripled. Second, the Iran war. Drones targeted an Amazon data center in Dubai last week. The market is pricing in geopolitical risk to tech infrastructure for the first time. That's real, but it's also temporary. Amazon has data centers in over 30 regions globally. One facility doesn't break the thesis. 40 out of 44 analysts rate this a strong buy. Average price target is $280. That's 30% upside from here. And Amazon is trading at roughly 34 times forward earnings. Cheaper than Netflix, cheaper than Microsoft, and wildly cheaper than most AI plays in the market. So what's the chaos capital take? Amazon is doing what it always does, spending aggressively when everyone else is scared, investing through the cycle, and getting punished for it in the short term, just like 2022. If you believe AI infrastructure demand is real, and every hyperscaler on the planet is saying it is, then $200 billion in CapEx isn't a risk. It's a moat being dug in real time. OpenAI chose AWS. That's the signal. The largest AI company in the world looked at every cloud provider and picked Amazon. At 213 with a 30% discount to consensus targets, this is the kind of pullback you look back on and wish you'd bought. But don't take my word for it. Kathy Wood just put $14.5 million into it in a single session. Amazon has been left for dead 3 times in its history. Every single time, it came back stronger. This pullback is the setup, not the exit. The capital markets are chaos. Embrace it, and I'll see you in the next video.